welcome to the FII View with me, Tanvir, Gill. This is a budget special. My guest today on this show is Jim O'Neill, former chairman Goldman Sachs Asset Management, who's on a short visit to India. Jim, great to have you on the show and great to see you in India.
It's very nice to be here.
Okay, so let me start off by analyzing, getting your thoughts on the budget, your analysis essentially, and your first opinion, your first quick reaction was there's nothing wow about it. So let's start off with that. Why did you believe that the budget didn't have any wow element?
Well, I'm not sure it's necessarily important that there needs to be a wow element. Let me say that first of all.
Sure.
But there was nothing that sort of caught my eye as that's a huge thing. Partly because coming from overseas, there is sometimes a lot of hype and excitement about some major FDI reforms. Mm-hmm. The world's going to be allowed to invest in Indian retail. The world's going to be allowed to invest in Indian insurance companies. There was none of that. Partly because of some long-term interests I've had and some of the early conversations I had with advisors to Modi, the whole importance of inflation targeting, what I'm here for on this trip about health and antibiotics. I didn't see any wow on any of those things, but on a number of important subcomponents, it might well be that there's a lot of important things being announced and sowing the ground for important permanent benefits, or what if you put them broadly together, you know, one would describe as an economist as genuine supply-side reforms. And in that sense, my early suspicion is that it's a more substantive, even though it's not as eye-catching, it's probably more substantive.
Directionally progressive?
Definitely progressive, definitely.
Okay. You know, I'll talk about some of the points of criticism that have come about the budget. One, of course, being that they have, expanded the fiscal deficit for the near term from 3.6. They revised the target to 3.9. Yeah. That pushes down the tight fiscal consolidation plan that was expected of the government. You think that that's too much of a miss, or it's acceptable given that the revised GDP estimates are signaling that growth has come back into the Indian economy?
Well, no. On the contrary, this is one of the things I really do like about the budget. One of my criticisms that goes back to this famous paper of 10 things India needs to do is they need to focus on the quality of government budgetary processes and the quality of spending. And not so much obsession with the headline deficit number for the following year. Okay. And there's two reasons why that are. Well, there's many, but at the core two. First of all, whether the deficit is hit or not is to some extent random. So focusing everything on we're going to have a deficit of 3.6, the finance minister knows better than you or I whether he's going to be able to do that. So to not just focus on that, I think is important. Secondly, because how the money is spent, and in particular, splitting it between government spending for investments and government spending for what's generally called consumption, is really important. And it looks to me what clearly has been done here is a lot more money for investment spending. And if the reason why they have a more relaxed deficit target is because of greater investment spending, I really admire that and applaud it, because to boost the supply side, to get so self-generating beneficial growth, which itself will help long-term revenues, that's exactly what India needs.
All right, so you're fine with a slightly extended fiscal deficit
I've got no
situation.
problem about that at all.
Okay, great. Then tell us what your understanding is of the rating agencies' call on India right now, and how much, because over the last 6 months there's been much talk about how India needs to get upgraded, as an investment on the investment level, and the fact that a tight fiscal deficit would be important for that. How important is it for India to get upgraded? How critical would be a ratings upgrade for India?
Well, as I think we may have touched on in past discussions, I don't mean to be rude about the rating agencies, but they tend to follow as opposed to lead, and of course the past 6 to 9 months the markets have upgraded India. And it's only one day after the budget, the Indian market hasn't dropped. So at a minimum, I think you can say the markets have kept their previous optimism about India, and it would be consistent with past practice that the ratings agencies would follow what the market's doing. So it wouldn't surprise me if they did upgrade India still, even though the deficit target's bigger than it was.
Okay.
If the ratings agencies are going to be so hung up just on the deficit target, I think they're making a mistake. At the end of the day, what India really needs to focus on, given its incredible demographic opportunity and challenge, is doing things to make sure all 1.3 billion people are going to participate, contribute and benefit. And I think there is a lot in this budget to support that. Social security provision, for example,
Sure.
As well as the investment spending that we've touched on.
Yeah, and on that particular point, on infra spending, do you think enough and more has been done? They have set up an investment fund. They're talking about, tax-free bonds. Do you think enough was done, or perhaps there could have been more announcements to push infra investments?
I mean, consistent with where my own philosophy is coming from about what India needs to do. I think for India to get 10% growth for a long time, like China has done for the past 30 years, this budget probably should have been a bit bolder about education spending and probably about health spending, because at the end of the day, those are the two parts which are really important for the long-term growth rate, in my opinion.
Okay.
And it's also partly why, going back to why there's no wow, there's nothing particularly big on either of those two things.
Okay.
Now, that said, I'm sure this government has got some focus on the credibility of its fiscal position. I mean, this time a year ago, there was a lot of worry about India being one of this ridiculous fragile five and big deficits.
Sure.
So they have to keep some of that in mind. But I don't think it's quite enough in terms of the components of investment spending to make me convinced that India is definitely going to grow by 10% for the next 30 years.
Okay.
Maybe
10% is expected, is the expected timeline for the next 2 to 3 years. Given the revised growth estimates, we're already
what is it?
growing at
Is that about eight and a quarter?
Yeah.
So yeah, I mean, I think there's enough for that, but 10. I've spent so much time looking at this in the past, given India's demographics. India could grow 10, 11, 12. But it needs a lot more to give belief that India's educational opportunity and achievement is going to be best of class in the world, so that India has literally some of the best universities in the world, and that so many more young people get a basic education. And of course, why I'm on this trip, all this talk about sanitation, what is being to make sure that every Indian person has access to clean water? What's being done to make sure that every Indian person uses a proper toilet? What's being done to make sure that the Ganges isn't polluted? And with all of those things, the specific thing that I'm focusing on is to make sure people are more resistant to some of these antibiotics that could cause a lot of problems about infectious diseases in India. They're the sort of things that are going to make Indian growth 10% and more.
Okay. The other aspect that we touched upon was also, improving the state and center relationship, because I think in some of our past conversations you'd brought that up, that you have to have more cooperative action at the state as well as the center level, cooperative federalism, and do you think enough has been done in that regard?
Well, here's another part where even now, 2 calendar days after the budget was announced, it's difficult, partly because I've travelled in the meantime, it's difficult to see the details about the devolution to the states, but this might be another part that's really good, because given the peculiar way which India exists, the reality is a lot of what actually really happens is, of course, at state level. So if this budget is truly empowering states to have more control about what they're doing, then that is something which is probably, devil is in the detail, so we say, but that's probably something which is really good, probably.
So from a market standpoint, do you think this budget has justified the re-rating that the market has seen over the last 6 to 8 months? I mean, we are 35% plus on the index. Do you think this budget has done enough and more for the market to go higher from here?
So you know, I find myself trying to be really objective and analytical about this. As you know, I've been incredibly bullish about the Indian market ever since it became clear that Modi was going to win. I also believe that the market would upgrade Indian GDP forecast, which it has done. So we're now at that point. So people are optimistic about Modi, people are optimistic about Indian economic growth. Everybody's talking about Indian economic growth being higher than China. And the market, as often, is usually ahead of the game of the consensus. So all of that makes me think I got to be a bit careful. It's easy to say, yeah, it's going to keep on rising. It might.
Okay.
I'm not as...
What's the caveat? What would
so
perhaps...
there's three caveats, I think, maybe more. There's three. First of all, at the same time of all these positive things going on inside India, of course, oil prices have collapsed. February, oil prices rose by 20%. If this is the beginning of a fresh rise in oil prices, that's not a great thing for India. Number two, as we've touched on, some of these budgetary measures that have been announced, their success is really going to depend on how well they are implemented. And we're not going to be able to know that tomorrow, next week. Take the Monetary Policy Committee developments. From what I understand, we might not know about that for the next year. That looks like a really positive thing to me. And if it's going to be a genuine independent monetary policy council with independent members, that would make me think the next 2 or 3 years India gets re-rated again, because people can really believe that Indian inflation is going to be stable.
Sure.
And then the third thing is actually what's going on with the cycle. Is India really growing by 8%? Is it just because of the rebasing of the numbers?
True.
And we're going to have to see some of the next numbers going forward. So if I put it all together, and here I must declare I've had a personal investment. I've been invested in an Indian fund for the past 18 months, and I'm very happy about its performance. I'm not going to sell it, but do I want to add more to that Indian fund? I'm not sure I do right now, but I might if once I see.
And
more.
when would you take that decision to add more or buy more?
When I hear or observe more about some of these details. So amongst many things, I'm really interested in hearing more about the MPC.
Okay.
Is it really going to be a new monetary policy council with independent voting on that isn't being controlled by the government? And so if the government, like over the weekend arriving here, I see lots of finance people saying the environment's great for interest rate cuts.
Sure.
If you're really operating with a truly independent monetary policy council, finance ministers don't say those kind of things. They say, we don't know.
Okay.
So I'd like to see more about those things, but it looks broadly positive to me.
The other view that I got, for perhaps bringing about a resistance in the market from these levels is the fact that, pace of reforms have not played out as was expected 6 months back. Do you agree with that view? Do you think that slow and steady, they have been able to deliver on certain promises laid, GST being a case in point?
So again, it's not something to rush to judgment on, other than superficially. So there's definitely no big bang, and especially as it relates to all this FDI stuff. By now, compared with 15 months ago, a lot of people, particularly overseas, thought of Modi as the passport or the gateway to enormous opening of opportunities for foreign investing. I don't think we've got that.
Yeah. But the enthusiasm was almost like, overnight floodgates for investments would open. But, in the last 8-9 months, do you see that directionally the ground is being laid for that to happen, perhaps for the next over the next 18-24 months?
So all of that in a way is disappointing. However, against it, what you are getting, and I think this budget shows more of than what I'd seen before, because it's covering a number of areas, is lots of efforts to deal with the complex detail and making sure that the groundwork is being done for longer term substantive things that really matter for Indian people, and doesn't focus too much on what foreign people want. And I think that's really important, because if India's going back to what we touched on, if India's going to get to double-digit growth, then it's really important that things are done to enable more Indian people to boost their productivity and participate fully in the economy rather than just the elites. And if you take it back a little bit further and some of the political roller coaster that's happened in India the past 15 years, I remember, you think back to when the BJP were last in power, then they got kicked out. It was because people thought only the elite were benefiting. Here, there's things going on that might sow the groundwork for so many more people to participate, a big rise of more entering the middle classes and so on. And so my suspicion is that all of that's pretty good.
Okay, so then how does India now look to emerging markets? It's been in a sweet spot for the last many months now, in fact almost a year plus. Does this budget strengthen the case for India among EMs, and does that get reflected in the way either ways the currency has withstood a lot of the selling pressure that other EM currencies have witnessed given the dollar's strength? Do you think that would continue?
Broadly speaking, I do, yeah. I think whatever the finer detail, relative to other big EM, and including the BRICS, with the exception of China, and if I think of the so-called mint countries, the next division, with the exception of China and Indonesia and maybe Mexico, India is the only big place that is really embracing reform. A lot of the others are failing to have any reforms and or really under pressure because of declining commodity prices. And this budget has definitely done enough, in my judgment, to keep India in that position. Has it done enough to push India to the further to be the top of the pile relative to all the others? Not sure. Maybe it might have done that. It might have done that, but I don't think.
The jury's still out on that?
I think the jury's still out. It could have done. It's certainly not done enough to say now that the Indian game is over. Part of me in the past fortnight was thinking, I will be saying to you today, that's it, India's done for a couple of years. But I don't think that's the case. I think India's still up there. Whether this is enough to say, you know what, we're going to re-rate India again relative to China and relative to Indonesia, I'm not so sure about that.
That brings me to my next question, which is what about the quality of growth in India, you know, and given the whole thrust that there is on Make in India, how do you see that kind of adding up?
That's why this budget, this is what I'm coming back to about the quality of the detail of some of these proposals. If the details are as good as obviously the policymakers claim, and very importantly, devil in the detail, they get implemented the right way, these things are going to ensure the quality of India's growth and probably make India less vulnerable over time to outside influences. One of the really interesting things about the past decade is the Chinese have sort of had their growth rate really driven by what they're doing, whereas here in India, there seems to be a lot of acceptance about a lot of what happens to India depends on the rest of the world. And that doesn't really make a lot of sense because India's got 1.3 today. In fact, India's got more people than China. So why should a place with 1.3 billion people have its growth rate depending on what happens in the rest of the world? And part of the answer is based on the quality of the policies to ensure the sustainability of growth domestically. And my creeping suspicion is that this budget is really good for that.
Okay, so, you know, before we wrap up, just the last couple of minutes, so I just wanted to get in some views on, you know, investment ideas in India. Now, the currency is held out. Do you think it's a fair value? I mean, within that range of 62, 63, do you think the currency would hold?
I'd have suspicion that it might even try to strengthen further, so to break out to be stronger than 60. But I suspect that Indian policymakers are going to try and stop it from appreciating because there is this focus on manufacturing competitiveness. And at a time where so many other currencies have been declining, India oddly can't really afford to have the rupee rise too much. So if it weren't for that, I think the rupee might strengthen further, but I think they'll stop it. So as a sort of carry trade against something like the Japanese yen or the euro, which I'm pretty sure is a big favourite in my old world of hot money, I think that's probably still a really good thing to do.
What about the Indian bond? Do you think that there's interest there? Because all emerging market bonds have seen heavy inflows over the last 6 months. Do you think that yields will continue to fall, that there is more scope there given the expectation from the RBI to cut rates?
I would say short of a big rise in oil prices, the environment for Indian bonds is still really good, yeah.
And what about Indian equities?
As I said earlier, I'm not selling mine. I'm not convinced we're going to get a 25% rally from here over the next few months, but I think over the next couple of years, I think there's a pretty strong chance that
I'm just interested in knowing what kind of an investment have you made in India? Is it a thematic fund? Is it a sectoral fund? Is it a mid-cap fund or a large-cap fund?
It's a fund that benchmarks against the market, but of course, like many others, it claims it tries to outperform the market, and it has been doing so.
Okay, great, and you're knocking on wood for that. Big trigger this year it was expected to be rates going up in the US. Where does the story lie there? Because it just seems like there's much thinking happening at the Federal Reserve on when to finally blink on rates. And at the start of the year, there was a minority view that rate hikes would be a story for 2016, but it just seems like that view is getting bolder and louder right now.
So, to be quite honest with you, I change my mind about it every week.
Okay.
On one level, it's quite clear that the US doesn't need emergency low interest rates anymore. So if that's the case, why don't they just get rid of them? Because at some point they've got to make that adjustment. And I guess the answer is, for some reason they haven't done it yet. And I think that reason is because inflation is so low. And my reading of the very latest things from Janet Yellen, and actually also from New York President Bill Dudley, who I think is one of the more important members of the FOMC, it's dovish. So I think they are clearly trying to, with keeping all their options open, I think they're trying to imply it might be a bit later than the markets have got in their mind. At the same time, of what I think is clear, is they're trying to send a message that we might change our mind as we go forward in either direction. So I think they're trying to introduce a bit more volatility and at the same time send a bit more of a dovish message than they were doing before.
Let's finish with that. I mean, talk about your visit and talk about your interest in drug-resistant diseases and the risk of them rising and a lot of people dying of it. And you have been talking about how that would be a good tie-in with the Swachh Bharat campaign that the Modi government is running.
So it's very convenient for me to be here right after this budget and the focus on policy. And we're actually hosting a conference in Delhi on Thursday about antimicrobial resistance. I've been tasked by the British Prime Minister to come up with a global solution for this problem. And as the early part of it, we've written a paper showing that if we don't deal with all of our growing resistance to antibiotics, as well as other forms of resistance, by 2050 there's going to be 10 million people a year around the world dying, and there could be as much as $100 trillion of global GDP lost. That's more than the current size of the world economy. India, because it has so many people, and because of its challenges about health and sanitation more broadly, would probably suffer more than most. So we are very eager to get some of our ideas into the mindset of Indian policymakers, and importantly, to have key Indian thinkers, particularly given India's great prowess at technology, to help us find solutions to some of these problems. So I'm very excited about the week, and I hope to go away from here with some new friends to help us solve it.
All right, Jim, we leave it at that and wish you all the best with your trip.
Okay,
Thanks very much for speaking with us.
My pleasure. Thanks.
Well, with that, we come to the end of this edition of the FII View. Thanks very much for watching the show.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.